Welcome to another back and forth with Becker and Orr. Lots of great topics today, including the lead-off topic. Are we in an AI bubble? Artificial intelligence, we hear it everywhere, Kevin. Let's just dive right in. Are we in a bubble?
Yeah, that's always the biggest question coming around. I mean, we had real estate bubbles. We've had the tech bubble that was back in the 2000s. Everything seems to be a bubble nowadays. But is AI really a bubble? I don't know that I'm convinced it is this time. And a lot of the times beforehand, you had always smaller companies that were the ones that were driving this. Yeah. Everybody had a little piece in tech. Everybody had a little piece in the real estate bubbles and everything else. But here, if we take a look even at this chart, CI is about the only publicly traded AI company. Everything else, NVIDIA, Meta, Advanced Micro Devices, Apple, Microsoft, these are all leaders in their division. They are huge companies to begin with, and they're leading the drive. So this may not be that factor because you're not taking a lot of small companies out. So it may not be a bubble. We may be seeing reality here for why AI is driving things at the moment.
Yeah, part of that, normally if you see a bubble, it's drowned by Wall Street supply. Like you remember the SPAC craze just a few years back. Suddenly everyone had a SPAC. Suddenly Shaquille O'Neal, for some reason, was involved in a SPAC, right? It was just, they drowned it in supply. You like this? Well, here's 10,000 other options of the same thing. You're not seeing it so far this time because we haven't seen a rush of companies suddenly involved in AI because all of the giants, like you said, just said, all right, let's put $10 billion towards this. So you have Microsoft, OpenAI, you had Apple, you have NVIDIA. The giants are already going very heavily in that sector. So you might not see that storm of upstart companies that just get loaded with IPOs and that type of idea. But the excitement and the valuations could change, right? The premium that AI gets, like when you're on an earnings call and someone says AI 1,700 times, well, the stock tends to go up. And on the excitement, this could lead to a lot of revenue down the road. And whether or not it actually does, we don't know yet. Too early to tell. But right now, these stocks are pulling back up. Arguably, they're getting a bit of a premium here, Kevin, a good valuation because of all the money they're putting towards AI. And you'll notice they're all the giants, like you talked about, C3 being the only really publicly traded small AI company. All the others are already massive companies. You'll notice the S&P 500, the TSX there, I put them in there for comparison. Small numbers when you look at things that are up 40, 50, 100%. But part of the reason they're up so much is the excitement around AI. So are we in a big bubble that'll turn into 2008 or something of that nature? Probably not. But could you see valuations in the future for some of the big companies start to, some of the air come out of those valuations? Maybe. You could probably see that because they're getting a premium price right now because they're so heavily invested in AI.
And I definitely agree with that. I mean, as we've seen beforehand with the markets, the pendulum is never in the middle. It always swings far too far one way and far too far the other. So I think we are getting a little bit more hype. And as you say, all you have to do right now is put AI in front of it. And people are buying. And you did the same thing when Bitcoin was around and everything else. So if you have that sort of thing, you're going to get that. So yeah, is it overpriced a little bit? Probably. Can it have a little more run room before it falls a bit? Yeah, that's possible as well. So I wouldn't say that you're bubble, but yeah, I definitely think that the valuations are something that need to be looked at going forward.
In part of it, and last little point here is on the massive companies part. Like Apple heavily invested in AI, had a phenomenal year so far. We're only halfway through the year, but keep in mind, in the dot-com era when that was a bubble, those companies just disappeared. They just imploded. The giants are leading the charge here in AI, and the giants have multiple revenue streams, right? Even if the AI piece turns not to end up being the big change we think it could be, well, they've got tens of billions of dollars coming in from all the different business units they have. Those companies will still be fine. It's just maybe at a slightly different price, right? So just different this time around. It's not the same kind of thing we've seen in the past. We got to switch topics here, and I'm going to inundate you with headlines here, Kevin. The Bank of Canada, maybe you didn't hear, but they raised rates recently, and there was just headline after headline about that rate hike. What's your take here?
Yeah, I mean, everybody thought after two pauses that, Bank of Canada is probably paused. We're looking at our next scenario is going to be a rate decline or decrease or a cut as opposed to a rise. But no, we're still here. And again, I think a lot of this has to do with the fact that we're now at that point where you're getting sticky inflation. 4% going from 9 to 4, not a problem. Going from 4 to 2 may be a large problem. There's a variety of those things. Consumers have not stopped spending. That's one thing. So you're still seeing that going forward. Governments continue to spend. That's another problem that's going forward. So as much as the Bank of Canada and central banks around the world are trying to control this, the only way you can really do that to slow the spending down that you really need is by making sure that the rates are at a high enough point that you're putting money away as opposed to spending it. And that is what they're saying. So are we finished with rate hike yet? Probably not. You probably might get another one in the Bank of Canada in July. And you could have another one before the end of the year. Are we slowing? Definitely. We're not going to get those 50, 75s anymore. You may get a quarter, you may get a pause, you may get a quarter, you may get a pause. But I do think that this is something that still has to be looked at due to that sticky inflation scenario.
Yeah, I would agree. I think the pace of rate hikes, which you mentioned there, is key. Like in a year, we went from rates being essentially nothing to suddenly being quite significant. Yeah. I don't think that level of change is what we'll see going forward. It'll be incremental. Maybe they hike a bit and then they pause for a while, then they do another little quarter point. That pace is likely what we have ahead. I think part of the shock is many folks were thinking, all right, they pause, maybe they'll start to cut. Maybe rates will start to come down. And they just took that off the table. They made it pretty clear that, you know what, cuts aren't in the near future. It's going to be pause or a little higher going forward. That's the anticipation. And in a positive point here, underlying that, you kind of hinted at it, it's a strong economy. It's the fact that people are working, they're making money, they're spending that money, the economy's moving forward. And because of that, inflation's become a little sticky. It's harder to get inflation to keep going down if everyone's working and spending money. So that's kind of a good thing. I'd rather have that scenario than have a recessionary scenario where everything starts to go down and then they cut rates. So a bit of a positive angle there in terms of why we're seeing the sticky inflation, why we're in this scenario with rate hikes. And these are big topics, folks. So if you have questions, reach out to us. Where should folks go, Kevin, if they want to hear from us?
They should go with chatwithclintonandkevin.com. By all means, we'll answer all your questions on any of the topics we have below, whether it's dealing with AI, whether it's the interest rate scenario we're dealing with, or any of the other topics we've come here, or something that you have that we're not covering at the moment. So please, by all means, go visit us at that point, and we'll be able to help you out with that going forward. That being said, we could talk rate hikes all day, but let's move on to the NHL. And we're going to do that one. What a great segue.
I love it.
I want to first congratulate the Golden Knights for winning the Stanley Cup. 6 Manitobans on the team technically, so it's always nice to see from our neck of the woods. But I mean, as much as I can talk that sort of scenario, I think I want to sort of shift now to we're into the off season. We're back to the Winnipeg Jets scenario. And on almost every trade board out there, 3 of the top 4 trade candidates are Winnipeg Jets. And that would be Dubois, Hellebuck, and Scheifele. This may be a huge change for the season this year. What do you think is going to happen? Are we going to have all 3 of those players? Are we going to have any of those players back? Or are we starting more of a scratch scenario?
I think what I think they should do is I think they should actually just do a rebuild year, right? Make some big changes, get some more prospects in the mix and actually start to rebuild. I don't think that'll happen. I think it'll be more incremental. So maybe Dubois goes somewhere, they get some prospects. Dubois wanted to go to Montreal. I'm not sure that'll happen. But I think Scheifele sticks around. I'm not sure Hellebuck sticks around. Maybe they'll get him on a 1 or 2 year deal. I don't think they should do that, but that's likely. And then you move Dubois and you get more incremental change. I think that's the most likely scenario. But again, I don't think they should do that. What are your thoughts?
No, and again, I mean, as much as everybody's screaming for rebuild, the problem is they won't. This is a business. And at the end of the day, getting to the playoffs, even as the 8th seed, as Florida showed us, is all you need. You get that extra revenue and it's positive for the company going forward, or in this case, the franchise. I do know that I think Dubois and Hellebuck are both gone. They've both requested that they want out. Dubois doesn't have a contract yet. He should be the first piece moved, I see. I think Hellebuck will be moved over the summer as well. I agree with you. I don't think Scheifele's going anywhere. You can't lose your top 2 centermen. Maybe something happens with Blake Wheeler, but again, this team is going to look vastly different come September, October than it did the year before. And, maybe fans get behind that. It's something that we haven't seen the core change. I mean, I know in Toronto, they're looking for a core change as well, but we'll have to see how that plays. So NHL,
we're looking at a change for like 2 decades in Toronto.
Exactly. Maybe we'll have that sort of scenario, but, Stanley Cup may not be here today, but, if they do the right moves, we could be looking down the road and see how things go from there.
All righty. Well, we'll switch back to the markets here. We talked about AI. Related to that is the tech rally we've seen this year. I mean, 2022 was a really tough year for tech. Tech beat up pretty much anything related to technology. And then 2023, you can see the chasm here between these 2 groups on the screen. This is the 11 sectors of the S&P 500, so U.S. data. You got a whole bunch clumped in the bottom there, many of which are actually negative year to date. And then you have a handful, 3 sectors that are actually pulling everything up. And you can see they've had some big returns. You have the consumer discretionary, the XLY there. Inside of the consumer discretionary, you do have Amazon and Tesla. Inside communication services, you have Meta, which is Facebook. You also have Google. And then, of course, in tech, you're going to have AMD, you're going to have NVIDIA, you're going to have Apple, you have Microsoft. And lo and behold, those 3, which are very tech heavy, are the ones leading the charge. And you can see the very big difference in performance there, Kevin. Is this rally got legs? What do you think's happening here?
Well, again, you're getting it from an absolute low position, I think. Let's remember, I mean, in 2021, all the tech sector flew like it was out of style. Everybody bought tech, and it was way overvalued. 2022 came, the world opened up again a bit. Well, I don't need my tech anymore. I can go out and I can do things again. And so all the tech sold, and did it oversell? Of course it oversold. It did the same thing. I mean, let's remember, Meta misses target, 20% down in one day. That happened, right? So this is the sort of the rally saying, okay, tech has been overkill. Again, that pendulum doesn't stay constant. So now they're swinging back. AI became the big topic. Anything that has that in, boom, we got to buy it. We got to buy it fast. So are they getting back to that point? Can we see this continuing? I think they will lead for the rest of the year. But again, I think you're going to get that sort of tapering off. The rest of the sectors probably have a little bit more climb rate to them. But yeah, these are definitely leading. I do think that will have a bit of a pullback sooner or later. But again, I don't think that's going to be immediate. So you can still get some run room out of a lot of these things yet going forward.
Yeah, and the chart I've created, I'll pull it back up. This is year to date, so the starting point is January 1st. Just looks at the rate of returns in January 1st, 2023. You are very much correct. If we pulled it back an extra year, and let's say, hey, what if we started, January 1st, 2022? Many of those tech sectors would still be negative, right? They're kind of bouncing back from a very ugly 2022. So if you look at the last couple of months, phenomenal performance. We look at, say, the last year and a half, not so great. Like that it's very much a catch up from all the carnage they went through last year. And this is kind of the opposite when we get to our question. We always love questions from clients, prospective clients. We get them all the time. But the Canadian side, Canada actually did quite well in 2022 relative to the U.S. We held up much better than the U.S. did because we don't have all the tech. But now you look 2023, Kevin, a bit of a change in Canada. The big banks are always dominant. And they've had a bit of a waffle here. The earnings reports came out. The bank stocks took a bit of a step back. Should people continue to hold those Canadian bank stocks?
Yeah, my view is yes. And again, in Canada, that's the big industry, right? You've got materials, you've got energy, you've got banks, and then you've got everything else that's sort of lumped together. But the Canadian banks have always been there for a long period of time. Now, are they the sexiest place in the world? Possibly not, it would be a saying. But let's remember in 2008, when the banking industry globally collapsed, Canadian banks were safe. They were a place to hold. Now their stock prices all got decimated, but they all did that. And again, let's remember, even though they didn't hit the target numbers for this quarter, they all made billions of dollars. 4 of the 6 banks that are the big banks in Canada all increased their dividends as well. And a lot of the reason that they didn't hit those numbers is the loan loss provisions. They jumped dramatically. And that's because the Canadian banks want to play it safe. We don't know whether the economy is going to hit recession or not. So let's put a whole bunch of money away in case some of our loans go bad. And then that way we've covered ourselves. Now, again, if these loans don't turn out to go bad and we sort of skim recession or get a soft landing, that all of a sudden becomes profit at the end of the day. And that could be a huge jump for their earnings going forward. So I do think that holding the Canadian banks now is a smart move. You could get some. There's probably upside. Now, will they do the tech scenario? No. They're definitely not going to have that kind of a run. And they may be flat for a while, but they pay solid distributions. For a portfolio, it's probably not a bad idea to have a Canadian bank or two in there.
Yeah, and that's always the case, right? So you never load up just on 1 or 2 items. The Canadian banks tend to be a little stodgy. In a year like this, they're underperforming, but they did much better in 2022 compared to other investments. So always good to have a bit of a diversified mix there. We've rambled for long enough, Kevin. Perhaps we'll leave it there, but we'll be back again soon, folks, with another video. Take care.